Hey everyone, welcome back to the channel. Future XRP. As the global cryptocurrency market matures, very few digital assets continue to spark debate, optimism, and institutional curiosity at the same time. XRP is one such asset. Designed to enable fast, low-cost cross-border payments, XRP has long positioned itself as a bridge between traditional finance and blockchain technology. Looking ahead to 2026 and 2027, XRP stands at a critical crossroads. On one side, there is strong bullish optimism, fueled by institutional adoption, ETF-related interest, and technological maturity. On the other side, regulatory uncertainty still casts a long shadow over XRP's long-term valuation and adoption. At the same time, businesses across the world are experimenting with crypto payroll systems, and XRP, along with stablecoins, is increasingly discussed in the context of real-world payments rather than pure speculation. In this in-depth analysis, we will explore the regulatory risks surrounding XRP and how they may impact its future, detailed price predictions for XRP in 2026 and 2027, the role of institutional adoption and ETFs, how businesses are adapting to crypto volatility, why stablecoins are becoming the backbone of crypto payroll systems, and finally, what all of this means for XRP's long-term outlook. This article is not financial advice, but a structured exploration of trends, projections, and possibilities shaping XRP's future. Before discussing price predictions, it is essential to understand why XRP exists and what problem it aims to solve. XRP is the native digital asset of the XRP ledger, XRPL, a blockchain optimized for fast transaction speeds, extremely low fees, high scalability, cross-border payment efficiency. Traditional international transfers through banks can take 2 to 5 days, involve multiple intermediaries, and incur high fees. XRP aims to reduce this process to seconds, making it highly attractive for banks, payment providers, remittance services, global payroll systems. This real-world utility differentiates XRP from many purely speculative cryptocurrencies. Regulation remains the single most influential factor shaping XRP's future. While market sentiment, technology, and adoption are important, regulatory clarity, or lack thereof, can dramatically accelerate or suppress growth. In March 2025, the U.S. Securities and Exchange Commission, SEC, dropped its appeal, effectively confirming that XRP is not classified as a security in secondary market sales. This decision was widely celebrated and triggered renewed institutional interest. However, this does not mean XRP is free from regulatory risk. One of the biggest regulatory question marks for XRP revolves around exchange-traded funds, ETFs. XRP-related ETF assets reportedly crossed $1 billion by December 2025. Institutional accumulation increased significantly after legal clarity improved. Yet future ETF approvals still depend on evolving SEC policies. If regulators introduce stricter conditions for crypto ETFs or delay approvals, institutional inflows could slow down. Since institutional money often drives long-term price stability and growth, any disruption here could negatively affect XRP's price trajectory. Stablecoins play a crucial role in the broader crypto ecosystem, including XRP-based payment and payroll systems. However, governments worldwide are scrutinizing stablecoins more closely due to concerns about monetary control, financial stability, consumer protection. If stablecoin regulations become overly restrictive, it could reduce liquidity in crypto markets, increase compliance costs, slow down crypto payroll adoption. Although XRP itself is not a stablecoin, it operates within the same financial ecosystem, meaning regulatory pressure in one area can ripple across the market. In the United States, proposed legislation such as the Clarity Act aims to establish clearer rules for digital assets. Unfortunately, Senate discussions have been slow, pushing decisions into 2026 and beyond. Without clear laws, institutional investors remain cautious. Banks hesitate to fully integrate XRP. Long-term adoption is delayed. A clear regulatory framework could unlock massive upside potential for XRP. According to AI-assisted projections, including models referenced by platforms such as Google Gemini, XRP's outlook for 2026 appears cautiously optimistic, assuming no major regulatory setbacks. Continued ETF inflows, growing institutional adoption, XRP could trade in a range of 580 to 860 during 2026. What would drive this growth? Several factors support these projections. Institutional accumulation. Banks and funds prefer assets with legal clarity and real-world use. XRP fits both criteria. ETF-driven liquidity. ETFs provide easy exposure for traditional investors, increasing demand. Cross-border payment expansion. As global trade increases, demand for fast settlement solutions may rise. Improved market confidence. Reduced legal uncertainty restores investor trust. At these price levels, XRP would represent a 203% to 350% increase from earlier reference prices, placing it among the stronger performers in the crypto market. If 2026 delivers strong momentum, 2027 could be a breakout year for XRP. Forecast ranges suggest prices between 10 Toy and 1250, representing 426% to 554% growth over current reference levels. This scenario assumes a bullish broader crypto market, continued regulatory stability, widespread institutional usage. Despite optimism, several risks remain: unexpected regulatory reversals, global economic downturns, reduced crypto market liquidity, competition from newer payment-focused blockchains. XRP's future is promising, but not guaranteed. Even with strong fundamentals, crypto markets remain highly volatile. Price swings of 10-20% in a single day are not uncommon. For investors, volatility can be an opportunity. For businesses, volatility is a risk. This is where crypto payroll solutions come into focus. Businesses operating globally face challenges such as high international transfer fees, slow settlement times, currency conversion losses. Crypto payroll systems offer faster payments, lower transaction costs, borderless transfers. However, paying salaries directly in volatile assets like XRP introduces financial uncertainty for employees. Stablecoins such as USDC and USDT are pegged to traditional currencies like the US dollar. This makes them ideal for payroll purposes because they maintain stable value, reduce exposure to price swings, enable predictable income. In many payroll systems, XRP is used as a liquidity bridge. Stablecoins are used for final salary payments. This hybrid approach combines speed with stability. Freelancers, remote workers, and gig platforms are among the fastest adopters of crypto payroll. Benefits include instant payments, no banking restrictions, easy cross-border transfers. Stablecoins make this system practical and trustworthy. For multinational companies, traditional payroll systems are complex. Compliance and banking delays increase costs. Crypto payroll with stablecoins simplifies international salary distribution, contractor payments, remote workforce management. As adoption grows, XRP's role as a settlement asset could expand. The future of crypto payroll depends heavily on regulation. Clear rules encourage adoption. Uncertainty discourages enterprise usage. If governments support regulated stablecoins and blockchain payments, crypto payroll could become mainstream by 2027-2028.